You're new to buying dividend stocks and you want to know what things should I be observing before I buy those stocks. Thanks for joining me today on my channel, and this is Discovering My Dividends. And my series is, well, just talking about dividends. So I hope you'll follow along and click subscribe and like to do that. Now, also, I'm not an advisor, so anything you hear on here is not financial advice. If you're needing financial advice, go see an advisor. This is more for entertainment purposes. If something here pops up that you've never heard of and it helps you understand it or know it better, great, but you should always do your own research and of course check out anything to make sure it's going to fit in with your portfolio. All right, so here's a few things that you might want to just check out when you are getting into dividend stocks and before you buy your first dividend stock. Dividend yield, dividend payout ratio, dividend growth rate, earnings per share, free cash flow to equity ratio, return on equity, dividend coverage ratio, what each company's dividend policy is, sector stability, the management's track record, price to earnings ratio. All right, so now I went through all of those and you're going, okay, that's a lot of stuff, but those are all different things you can look up and learn. I can tell you that when I started doing dividend stocks, I didn't look up all that stuff. And I found that you don't necessarily have to know every single detail about a company, but of course, the more you know, the less risk you're going to have, right? So you're putting yourself more at risk when you are picking stocks based on very little information. Now, there are certain metrics that you can kind of look at that might give you a little better picture, but you can also go on the history of what a company's done. I wouldn't necessarily recommend doing it this way, but for instance, I'm in Canada and Canadian banks typically have done quite well. And if you look at any of the mutual funds out there that are pretty general, Canadian banks are, some of the largest holdings these mutual funds have. And the reason being is they're far more stable. They're also consistent with paying out dividends, and they consistently have growth, and their dividends continue to rise over time. This isn't universal, but in general, you could say those things happen on a regular basis. So if I was wanting to get started, maybe I would look at a certain sector like banking in Canada and choose a bank. Now, again, I'm not an advisor, so this is just general information. If you're going to go out and start picking stocks, you're going to want to go through a list of things that you find that are going to give you a little bit more security when you're making those choices. So one of the few things that I started with is I wanted stocks that would have paid out over a long period of time consistently. I wanted to see a company that was increasing the dividends over time. And of course, I wouldn't necessarily need them to be doing it for 25 years, but it's consistently over 5 to 10 years. And the profitability of the company was important to me. So I didn't really like to look at companies that their profitability would be up and down. Their profitability was sustainable from quarter to quarter. And so with that being said, that was important. Now, it's also becoming more important to me that the company have cash flow, because if I'm going to be using dividends and I want that to be a major part of my investment growth, if the company doesn't have cash flow, it may not be able to pay out that dividend going forward. So that's one of the metrics that I kind of look at now that is quite simple. These are very simple, straightforward things to look at. And if you are really, really, really wanting to make it simple for yourself, you can narrow it down to just a few matrices you find important, but that may also become troublesome if the companies are not performing at the rate that they need to be, because the matrix you're looking at didn't quite cover that information. You may be putting yourself at more risk. I'm going to give you 3 examples of things that I saw online where dividend stocks were recommended. So the first one, like I'd already mentioned, banks, and banks that have come up on different websites I've come across. And again, just because of their growth over time, they're continually growing, they're continually paying out a dividend, and that dividend has had growth over time, right? So very positive that way. So they tend to come up different websites like to promote that. I've also had websites that have promoted companies that have high dividends. So for instance, I've come across stocks that were paying out 15 to 20% dividend, which seems really crazy, but the price had dropped. And then of course, because I was really limited on what I was using to investigate those companies, I didn't read far enough into it and found out later on when they stopped paying dividends that at a certain price point, the company would stop paying dividends. Now, simply put, if I had read more about the company, I would have probably found that out. Because I didn't, I was now holding a company that stopped paying out a dividend. Now, eventually it did come back and pay out the dividend, but then for the year, it was not paying out 20%. It was probably paying out closer to like 8 to 10%. So I still made a decent dividend off of it, but the reason I bought it is because I wanted that incredible dividend growth, and it seemed like a good time to buy at that lower price. Now, because I hung on to it, once the price went up, I did okay, but in that time period where it stopped paying out dividends, there was a lot of uncertainty. And the third one here, there was a Canadian stock that does a lot of international purchasing, and they build up their company, and their growth has been incredible over the years. Now, their dividend payout is quite small, and I think they pay out about 1 to 2%, so they're about 1.25, and they kind of stay in that range for their dividend payout because they are really focused on growth. So when they're trying to grow their company and they keep more money for that reason, there's a lot of potential growth. And this company's had a lot of success that way. But when you look at the dividend yield at 1%, you're like, well, that's not even what inflation is. But here's the thing. They continually pay out a dividend regularly. The company, the value of the company, the stock value is increasing in price, and their dividend payout continually pays out a higher amount. Now, that may not be every time they pay out a dividend, it may not grow, but over the years, it's continually been going upward. So that means if you bought a stock 2 years ago and it was at a 1.25% yield, but the company has tripled in price and they've increased their dividend to match that, you can see that that dividend value over a longer period of time, if they can continue on this projection of growth and continually finding ways to increase the value of their company, that dividend going up over time is going to be worth a lot more. Plus, you're getting the value of the stock increasing as the company goes up in value. So there's a lot of potential growth there, and that stock or that dividend payout is really a combination now of the total gains you can make by the dividend and the growth value of the stock itself. So 3 different ways you can look at dividends, 3 different things that might look really appealing, but may not turn out to be appealing, or the other way around, they may not look so good, but really in the end, there's a lot of potential. So definitely look at different matrices to see how a company's performing, how it's going to benefit you in the long run, and is it matching up with what it is you're trying to accomplish. All right, thanks for joining me today on my channel. I hope you'll leave some comments. Let me know what you think about the matrices I mentioned, which ones you're following or which ones you find interesting or what you'd like to have more information about. Click subscribe and like. Follow along in the series. Thanks for joining me today. Have a great day. We'll see you next time.